welcome on board Jonathan Schiessl as well. He's joining in to talk to us about the fundamentals of the market. He's, of course, a Deputy CIO at Westminster Asset Management as well. Before I talk about the Indian markets, Jonathan, I want your view about what's happening in Europe and at this point of time, especially with Deutsche Bank, wherein the credit default swaps actually have spiked materially, and we are seeing a deep negative reaction across all European markets, and there is this worry about a contagion effect. Your take as to how the banking system is shaping up in Europe?
Yeah, I think the ECB clearly earlier on in the week, after what happened with UBS and Credit Suisse, tried to sort of get ahead of the curve to some extent. And I think Deutsche Bank in particular has for some time been a bank that has from periodically come under attack, shall we say, for its relative weakness of its balance sheet and other issues that's been affecting it for some time. So I think the market has been to a degree expecting this on Deutsche Bank for some time. But I think, clearly the contagion issue hasn't been put to bed yet. And clearly, the slightly weaker banks out there are getting picked off, shall we say, for the moment. But so we'll be expecting probably some further action from the ECB to try and head this whole issue off.
Lower on just a whiff of CDS on Deutsche. That's really taking a knock for the entire region. In fact, it's a 230-point fall, no less, for the DAX. FTSE as well, over 100 points lower there too. CAC down 1.5% too. FTSE MIB, Stock 600, a 1.25% drag coming in there as well. And I don't think it could be anything different for even the US pre-market futures, because they too are trailing right now. Even NASDAQ, for instance, which actually recovered most amount of lost ground from day before, which held up about 1% overnight. That also is indicating at best only a flat start, and these are just early days. Let's just wait for the markets to open. Who knows what's going to happen since then. 73 points lower already on the Dow futures as we speak right now. But let's take stock of our markets. IT as well is now actually giving up gains. It's only Infy which is holding up 0.5%, and TCS to some degree. The biggest mover on the index today is Kotak Bank, and that also is less than 1% higher. But Bajaj Finance has cracked 4% right now. Adani Enterprises down 3.5%. Bajaj Finance down 2.6%. Tata Steel down. Adani Ports, ONGC, and Reliance is dragging a fair bit. Once again, it's testing that 2200 level. It's a good 1.6% gash that you're seeing on Reliance. Other big boys like L&T as well, a big drag, and so is the case with SBI too. Kunal, in this wave of a fresh sell-off, or at least it seems to be the case, you think we'll get back to 16,800?
Well, it looks like, Aisha, but I'll still keep it more of a wait and watch. Actually today's trend is indicative of two different trends within two different sub-trends, because on one hand the index is still sideways. Now I think except for the last half an hour where there is some whiff of a movement which has come back into the indices, you look out throughout the day, the indices were absolutely flat. Nifty was trading at a 50 or a 70 point range, Bank Nifty at 100 point range on a very flattish kind of a note. But the broader markets were selling quite strongly. There were a lot of stocks which had come back into the selling spree. Many stocks have witnessed a breakdown for themselves. And this generally indicates that we are now into a zone where the indices are not signaling much, but the broader market weakness is getting a bit more prominent. So if the weakness in the broader market accentuates for the next couple of days, then I believe that sooner than later the indices will also come out of this 400 point odd consolidation. So which way the indices would break out, that will be a bit tricky to preempt. But I think if we break below or rather if the broader market continues to go into a weaker mode for the next couple of days, higher chances that we may drift back below that 16,800 mark as well.
Okay, let's go across to Naresh as well, if he is there with us, to understand what his take is on the markets at the moment, because clearly 17,000 has been given up, and even from the Bank Nifty point of view, which was outperforming earlier, is now seeing a cut of almost 170 points actually. So a bit of an underperformance coming there as well. Naresh, your take on what's the best strategy to play the markets at this point of time?
Strategy remains the same. Continue to hold on to the position with a stop loss at 16,800. So if you look at the markets today, the two heavyweights in the banking space have not corrected. So HDFC Bank is actually up 0.1%. You have Kotak Mahindra Bank up 1%. We are seeing a lot of volatility across the world. So we've seen a cut of say 1.5% on DAX happening in quick time. Some bit of a recovery there. So this volatility continues, and we need to wait for a resolution of this volatility beyond the price point. So if it goes below 16,800, then the downside opens up. If it sustains about 17,200, that's when the upsides open up. So we are right in the middle of the range. We are just flip-flopping with a lot of volatility. We're not taking a direction as yet. We are not seeing heavyweights take a major dip. So for now, wait and watch. Wait for further price action to take the next action.
Right. Jonathan, just wanted to understand what is it that you're making of the India market right now? I mean, many believe, including Citi, Bank of America as well, that valuations have become attractive. But what do you begin to buy now?
Yeah, no, I think you're right. I think it felt for a little bit that this sell-off was sort of nearing the end of it. That there was, potentially another, I guess, 5% or so downside risk to the market. And when you compare India to other emerging markets, it has undone some of that outperformance of last year, and it was getting back to attractive levels. From looking at the actual market, I think IT stocks, as you were just highlighting, have been holding up. We always like to have a good balanced portfolio of Indian sectors, be it IT, be it financials. So I think the broader market obviously is coming across coming off across the board, and certainly there are some some of these valuations are now looking a bit more attractive than they were 6 months ago or so.
Okay, so that's the take coming in, how the valuations stack up for the Indian market at this point of time versus rest of the globe. But we'll do one thing, we'll slip into a very short break with the news that the market is pretty much at the lowest point of the trading session. Yes, there has been a bit of a bounce back, but we'll track that when we come back.
Back with closing trades, still awaiting that backgrounder on STT and the clarification from the Finance Ministry. While it's still awaited, the markets definitely are in a bit of a rocky situation. So we are, back to sub that 17K mark. We're down almost about 100 odd points at an index level. And of course, the breadth is the one which is getting really battered as we speak. Your laggard sectors are financials, metals, real estate, infrastructure, media, power, and banking in that particular order. Bajaj Finance and Bajaj Finserv are the ones which are really nosediving. Tata Steel is down 2%. There's Hindalco, Hero MotoCorp, L&T, etc., which are all weighing heavy on the index, as is Reliance, in fact. It's down to now 1.5%, almost close to that 2200 level. In fact, 2218 on the futures, spot currently at 2214 thereabouts as we speak. Kunal, you had flagged off the weakness in Reliance, what you see on the charts. You think it'll get worse from here before it gets better?
Well, I think it's already in that worst stage so far because it's unable to lift off above major kind of resistances. 2250, 2300 mark has been a major resistance for Reliance Industries. It was actually a major support since last 1.5 to 2 years. We've seen a multiple bounce back for Reliance Industries from those levels. I think yesterday or day before there was an attempt to come back towards the 2250 mark. We closed about this level, but the way in which the stock is showing weakness and not being able to sustain even for a couple of days above that 2250 mark shows the inherent weakness from the bulls in trying to hold up those levels for the stock, and I believe that's not an ideal or a good sign for the stock price. Now, it's always better that you buy the on confirmation. So I think in that regards, I would wait out for a point where the stock breaks past about 2,300 mark. That could be a zone where we will be relatively, higher probabilistic that the stock has formed a base and it's now trading about the key resistance level. So as of now, would avoid trading on the long side. Only about confirmation of 2,300 on closing basis. It makes sense to buy the stock.
Okay, Jonathan, I wanted your take regarding the banking sector because it's been coming under pressure of late, moving sideways a lot. Do you think this is an opportunity to kind of maybe lap up some of the names, or would you stay away from them at the moment?
Yeah, look, I think India is blessed with some very really good banks, very high quality franchises, and a good sort of growth trajectory. So there's a lot going for the Indian banking sector. Very well regulated as well. I think the issue obviously is globally the sector has come under a huge amount of pressure, and so there will to some extent be some sort of ETF and sort of passive selling that'll remain sort of a headwind until we get some resolution globally in the whole sector. But Indian banks themselves, we continue to like Indian banks, and certainly from a regulatory perspective, a lot of the issues that are affecting global banks elsewhere in the world don't particularly you don't have the same issues with Indian banks. Obviously, Indian banks are primarily domestically focused, very little overseas operations these days. So yes, we do like the sector.
Right. Jonathan, just wondering, how is it that you're viewing Indian IT right now, and especially in the light of the commentary from Accenture yesterday? Yes, while what made headlines was the 19,000 job cut, but the underlying commentary was strong. Correlate that with what you hope would happen to Indian IT in that light, because pretty much the global environment is the same, and IT is pretty much the cloud kitchen for global banks and BFSI sector.
Yeah, absolutely. It's the dilemma going on at the moment. You've got a good structural story for the IT sector globally, but obviously, as you rightly point out, the financial sector and banks in particular have been certainly big clients for these IT companies, and until we see some sort of resolution, then a lot of investors are just going to be looking at that sector, saying there's earnings risk coming through there. So in the short term, yes, these are good business models. Yes, they're fairly defensive, but in the short term, I think, again, until we get some sort of resolution or some sort of calming down of this whole, mini financial crisis that we've got going on at the moment, then the sector's likely to underperform to an extent.
That's the take coming in on the IT sector. A bit of a dilemma that all of us are facing with respect to whether it is priced in or whether growth is something which is going to slow down further. But let's get some technical picks from our technical experts. What are the closing trades they're executing at this point of time? Nuresh, you go first.
So that would be a sell on Aarti Industries, a fresh 52-week low here. The stock could go towards, say, another dip towards 470.
What about you, Kunal? What are you strategizing with respect to your closing trades?
So it's a sell on Manappuram Finance, stock forming a near-term top at the 121.22 mark. So would be looking to sell the stock. Targets in the near side would be looking out for closer to 112, 114 range.
Okay, Jonathan, great to have you on the show. We'll let you go on that note. While of course, it's the European markets which currently are getting jittery. Deutsche Bank has slid about 8% after the sudden spike in the cost of insuring against its default, that's CDSs, and our markets as well feeling the heat. In fact, as we take a break here, something light considering it is Friday, and if you are aware that in our day-to-day lives there are multiple food items that are named after famous personalities as well. Did you guys know that?
Not really. Let's see.
Name one. Eggs
Jalebi, maybe? Oh, eggs Kejriwal. Oh, yeah.
Foods
I don't eat
after
eggs,
celebrities.
so yeah, I don't know. Let's watch the report to get more.
Yeah, Ankita has found out why these names were attached to certain food items. Let's find out.